All right, so for this one, it's going to be higher percentages. So this one, we're going to be stacking what I just taught you guys yesterday with today. And I want you guys to see. So this week, I had a few trades that hit high. One hit extremely high. That'll be Baba. I actually missed out on this trade. At 50% here, and we gapped up. So. All right, so when we look at these trades, you guys think these higher percentages, people always like, how are you doing them? So there's two ways we're doing them. And the reason we're doing them, obviously, because you can use less to make more, so you can make money faster. The more money you make, the faster you compound. The first way is the more obvious way, is you're finding an outsized move for the time of contract. So we look at these contracts here, they were only, I think, like $1 or less. Now keep in mind what I told you guys about Greeks, and I hope everybody watched that video I put about Greeks from TD. From here to here, that was $5. That was pretty good, actually. Let me do, because I think I was mine. Yeah, mine was same day. From here to here, this was only about $2. So since my contracts were about $1 and some change, I only made, 50 delta per dollar. So since they moved $1, each, since they moved $1 total, I mean, they moved $2 total, I made, close to 100 off of these because I'm making 2 delta payments, obviously. Now what happened, it came back before I noticed it because at high, I was up like 130%. The only reason I wasn't on them is because I had a strong bias for it to go up here. My mistake, even for me, I sold here and I was like, I expect us to push up here, but I was like, I'll just get in tomorrow, which was a mistake because we gapped. But I purposely wanted to play weeklies to get a higher percentage, so I was taking that risk. So from here to here, we were up, these contracts were up 3,800%. So my contract that I bought went from being up 50% to break even to being up by the end of the day, 4,000%. Does anybody know why? Yeah, wow, there you go. Yep, so perfect. Implied volatility, and they went deep in the money. You guys are learning good. So this trade from here to here, when we look on a 15 or on a day, Bob was only supposed to move $4. From here to here, Baba moved $14. We moved 3 times the daily average. But there was another trick. Does anybody know? Out the money, these actually weren't really out the money, but the out the monies were super high. So the other trick was we went from Tuesday to Wednesday to Thursday moving up. So this whole time, the cost of these gets cheaper. By the time I checked the chart, these Thursdays only have now a day left, but we've come up so much. So down here at 92, these Thursdays being at 104 were so unlikely that they were probably 10 bucks or less. Because of that gap, we jumped up exponentially. So that's the first way. It's the more obvious way. You look for stuff that's going to give you an outsized move, and you hopefully can hold it for the whole day or swing. Now, the second way is going to be, let me find the ticker. Boom. This is the one I'm planning on trading. The second one is going to be to hold through the move. So some of these stocks make long, slow, deliberate moves. Perfect example would be steel. When it starts an uptrend, pretty obvious. Downtrend, it's pretty obvious. So you got to think from here to here. That's a $4 move. It doesn't sound like a lot. Like most people are like, oh, $4, nothing. Tesla can move this, blah, blah, blah. Amazon moves this. SPY can move $4 in, a minute or less. Keep in mind though, look at the percentage. That's 20%. This stock is only $27. This did this in only 1 month. So think about this. If you were in a monthly swing, even on asset, you made 20%. It's still a good return. On contract, if you make 20%, your contracts are easily going to be like 3,000% or more. That's a significant move. So the second way is by being able to find swing trades or moves that are going to continue. So the main way I do this, which is why I still will take swings when I see them, when I see a move looking like it's going to happen, I'm watching here for this as opposed to this. So same thing is happening here. We sold off. We've hit a low, and look, we've already started giving signs structure-wise that we're going to push up. So if you look here, we have a break of structure. Look here, we got another break of structure. So I'm now positioning into swings. Another thing, look at these lows. What's happening here with these wicks? What's causing these wicks? Higher lows, yep. Stops, yep. But what causes them to go up like that? There's what? Pressure up, yep, buyers. There's buyers in the market. So I'm knowing whenever price comes into this level, it not only gets bought, but it's aggressively. So I'm watching for this volume that's been sold off, hit a low, and it's consolidating. And realistically, I'm expecting it to knock out some of these highs. So what did I do? I hopped into calls, but I hopped into them instead of a weekly, I'm hopping into a monthly. And I was still able to get these calls for only about 60 cents, so 60 bucks a contract. Now, when you're getting these trades, especially for swings, you're always going to want to be buying contracts that are monthly. And when I say monthly, I mean the standard expiration. So when you go into your broker, you're going to see your contracts are going to look like this. January 6th expiration, January, I think, 13th, whatever. Then you're going to see January 2023. Then you'll see January 27th or whatever it is, the last Friday. The standard monthlies are always going to be the one that are the third Friday. And they're usually going to not have a date. They'll just have a year. These are the contracts you want to aim for. Because when you look inside of your broker, you're going to notice these contracts are going to have the most volume and open interest. Volume is the amount of contracts traded. Open interest is the amount of contracts open on the market available for purchase. Whenever you see a strike like this, that's a hint that the people with the money are looking at this strike as a level they want to push price to. Also, once you understand the game and you trade a while, you know you could have a level that looks very obvious that we should hit based off ATR movement in like a week. And what they'll do, they'll purposely gap it down to generate more liquidity, only to push it back to this level by their date. So what I like to do is buy monthlies and aim for a level below. So the level I picked is technically below their level. That way, I know by the time I get there, I'm already in the money. So like I bought these and today I'm up 60%. So see how that works? Perfect, perfect, nice, nice. So those will be the two main ways. Now, the third and trickiest way, and this is what I specialize in, and mine just is a shorter lesson, but it's cool because you can have a lot of homework. This one is going to be understanding how the assets move with time decay and manipulate them. So when we look at the SPY chart, and this is what you guys are going to have to do to get familiar. We look at today. I don't know if you guys have Webull. You guys got like Webull? Probably the easiest one. If you don't worry, you'll fall on. But for the ones that do, you can pull up your Webull. Perfect. All right. I'm going to go to SPY. If you guys can go to SPY on your Webull, on my mobile, and I'm going to pull up some contracts. Awesome. So I'm looking at the 379 calls in the money. Keep in mind today was such a volatile day, so it's gonna be a little harder. Boom. Okay, so when you pull up this contract, you go to about 940. You're gonna see, or actually go to, where is it, 930. It's right when it opens, right there. Everybody there? Boom, there we go. Awesome. So right at open, when you look at these contracts, they opened at $5. But remember, we tanked. Within 5 minutes, they dropped to about 340. 10 minutes in, or 15, we were right at $186, 186. By the time we hit 950, we had stabilized. Now, keep in mind, it's kind of hard to show today specifically because today was such a terrible day and price was up and down and all over. So as you start to scroll to your left, you'll notice around 10 o'clock, and keep in mind, I'm Western. So for you guys, that's 1 o'clock. We hit a high again, because remember, today we went from low to up to high of day. Remember at the end, we went to the high and then we sold off. So we hit a high of day at 10. We literally hit the exact same spot we opened. But do you notice something about the price of the contract, even though we hit that same high price-wise? Anybody notice anything? From here to here, price was almost exactly the same. Right. So they're not negative. Oh, like technically they are. Yeah, they're negative if you were holding from here. But we're looking at it as a perspective of someone who is just a buyer of options. Here, you're getting them from a discount. So here, this was open, they were 500. Here, this is 11:45 a.m. PST or 2:45 EST. They were half the price. So here they were $245. When you look at the day is divided up when we're trading the SPY or SPX into two sessions. Even though it's one real session, there's two parts to it. There's the first part we call the AM, and there's the second part called the PM, which if you notice when you go back and look at the day, you're going to notice each part of it trades very differently. Like if I put this here, this day looks way different than this day. You see how we unnaturally reversed, like just randomly? It does that every day. Every day, because these are two separate markets technically happening. So price trades up, and that's why I always mark it 9 o'clock or 12 o'clock EST to 1 o'clock. The stock market goes on lunch. So the people who make the market, all the hedge funds, institutions, all that, there's a lunch break that hour. So because of that, the volatility tends to die down, price goes flat. When I first came up with this, my first thought was, how can I help people find options for cheaper? And also, it's what I started doing. And what I started to notice is because of theta decay, your contract value on days like this or any other day looks actually like this. So where is it? Where's my drawing tool? Let me turn this one to a line. There we go. This is the high. This is the price of your contract. As we go throughout the day, your contract rapidly decreases. So from up here, this was an average of 5. You had a range of about 4. We had a range of about 3. We had a range about 2. Once we start to pass this time of day, your contracts automatically, regardless of where you are up here, are stuck in this range. So primarily, what you guys need to be focusing on is waiting, especially with smaller accounts, into lunch or pass, because this is when your contracts get theta washed. And this is a big part of my plan. So when you guys start to study the charts and the contracts, you're going to notice every day. On a normal day, keep in mind this is news, so everything was crazy. They're normally on $5. They're about $2, anywhere from $1.20, a little out the money, to about $2.50 is the normal price for a SPY. Because of volatility, they were 5, but down here they were half off. So understanding this and waiting is where you're going to get the major discounts. Because I guarantee you this move from here to here took these contracts. Actually, we can see. It's right at lunch. This is Yeah, that took those contracts from a low less than $1, about $3. And that happens every, oh, actually, no, I'm sorry. Here it is. Took them from a low 86 to almost $3 again. So from right here, you turn 86 into about 300. It looked like $360. So you almost, oh no, you did. You 4x your money. Understanding things like this. Now keep in mind, this spike was very random, but that's what happens every day. So when I'm playing, especially if I'm on a budget, I'm looking at the price of the contracts as we're going. So when we come to something like ES and SPX, these contracts get exponentially cheaper as you go throughout the day. So let's pull up SPX. Here, obviously off of open, SPX contracts are going to be very close to 2 and 3 grand. As we start coming by hour, it get cheaper and cheaper until we get to the final hour of the day, especially. This is when the contracts literally become dirt cheap. I'm talking dirt cheap. This is when these same contracts that are 38.20, above 38.30, right at the money are only about $2 for SPXs at the money. But these further at the money, these literally become $1.80, 60. But what happens when you look at SPX? If you get any of these contracts that are 80 cents and you get an aggressive move up, that 80 cents literally is going to jump you from 80 cents to about 800. Because once you're in the money on SPX, it's a glitch. Remember when I talked about intrinsic versus extrinsic value? Perfect. This is where SPX comes in. And it took me a while to figure it out until I was talking to some friends about it. It's literally, it's something they can't really fix. It's just made a part of the market and why SPX contracts move much more than SPY. Normal contracts pay you $1 per, they pay you a delta payment per dollar movement. We're all in agreement with that, right? Perfect. Cheaper contracts, some of them like US Steel will actually pay you that same payment per 50-cent movement, which is really great. SPX pays you per dollar, but keep in mind, SPX is a 10x version of SPY. So when you're getting that dollar movement on SPY, you're getting a $10 movement on SPX. And since you're getting a $10 movement, you're getting 10 delta payments at 0.40, at 0.50, at 0.55, at 0.60, at 0.75, 0.80, at 0.90, at 0.95, 97, 98. So that $1 you make exponentially more because you're technically getting 10 delta payments, which is why if you get like a 10 or if you get a $2 move on SPY, that $20 move on SPX causes your contracts to be up hundreds of percent. It's literally something they can't really fix because the way the contracts work. But they know most people lose money with SPX, so they don't care. But at the same time, the people who are smart and are really good in understanding the way SPX move make tons of money, which is why you've seen me, 2 weeks ago, take the $30 account to $1,500. I purposely waited till I saw an opportunity. I bought contracts that were out the money, that were way down here, that ended up running up to here. They went from, or no, I'm sorry, it was actually puts. I bought them all up here, up open, pretending this is open, ended up coming here. So they went from literally way out the money to in the money. So there's two opportunities with SPX you can do that. On trend days, which are rare, but after a while you're gonna get used to it. These are obviously days where we gap up or down and keep running. So this would be, let's see, a day like this. This is an obvious trend day. Technically, this is 2 days of trend. On this day, we opened at 39.52. We hit a low of 38.79. So we lost about 70 points. These contracts out the money on open, I guarantee you down here, were less than $40. But by the time, yeah, it was 0 DTE. Yeah, these were 0 DTE. By the time we got to here, these 40 were probably about $2,000 because they went from out the money to in the money. So the two ways you can kind of take advantage of it, when you see trend days, where it's odd, like, and the more trade, you're going to start to know what a trend day looks like. You can be like, hey, I'm going to buy some out the money contracts that are going to hit the target. And usually what I aim for on a trend day, outside of my normal trades, I'm buying contracts that I'm like, by the time they hit here, they should be in the money. So if I expect them to hit 39.95, I probably buy some 4,000s. If I'm buying up here and I'm buying my real contracts, these, I can buy a bunch of these. And even if I'm not managing them the best, they're so cheap that it's worth the risk. Like even if you were to buy 5 here for $100, if you hit and this actually goes into money, those 5 that you spent 20 for are each, now $2,000. So you literally turned 100 to 10 grand. That's how people make so much on SPX. They take advantage of trend days. Now, on days like this, what you can also do as you get more skilled is start to forecast like, okay, actually, I see it's coming down here. And I have a friend, he does it all the time. And he ends up just buying, like SPX is crazy, I'm telling you. I was going to do, actually, I do it often on this little small account I've been purposely, every other day I'll buy contracts that are way out the money, like 20 or $30, because even if they don't hit, if we get in a move that aggressively moves toward my strike, by open, they're up hundreds of percent. And you can just keep doing that, compounding. A smart move here at 4,000, especially like if this is way more than normal. So like, let's say like tomorrow we have news, right? And we're gonna wake up and it just gaps way up. You already know what's coming down for today, but the smarter move is not only buy today contracts, but buy tomorrow contracts that are further past today's low, but into like where you forecast. And you're going to notice they're going to be so cheap because this move happened aggressively so up, it messes with these contracts and causes these to be cheap because they're unlikely. As you start to come down, these get exponentially higher. By the end of the day, these are going to be worth, 7, 8, 1,000. But up here, these contracts were probably like $50. You got to think, you're buying these with time, you're going to be a lot less worried about any pullback because you have 3 days technically. From this to this, you wake up, you're going to be up about 3 grand because you're right at the money and you'll be in the money. So that's the other way to play with SPX, manipulating it. The last way that I do it, after lunch and after this last hour, I literally watch, and when we come into about the last 30 minutes of the day, the contracts get insanely cheap. And when I say insanely, I mean $10. This from here to here, I guarantee these contracts cost about $10. I used to do it all the time. From here, these contracts were literally probably anywhere from 60 to $100. So same thing, you could buy a bunch of these $10 contracts. Even if you just bought 10 of them, that's $100. From here to here, you literally then turn your $100 into like $650. 6x your money. Or there's times, you know, if you really get lucky and it really comes down, you can turn your 100 literally into, you know, 1,500, 2,000, 3,000. Because what happens, these contracts, like I said, up here are $10, 30 cents, you know, 40, 50, or if you get at the money, they're like $100. And they'll instantly go in the money. And now the time value has worn off, but they're in the money. So as you start to watch, you'll notice on the chain towards the end of the day, when you look at the finishes, you're going to notice, especially on SPX, actually, we can look at it right now. The ones that are out the money are going to be so much cheaper than the ones that are just one strike in the money. And that's because the out the money's lost all their extrinsic. So when we look at SPX, and this used to happen to me all the time because I would do this so much, and sometimes it's high risk to high reward. But perfect example, if you would have played SPX calls, by the end of the day, the 3810s were nothing. They were only 10 cents. One strike in the money, the 3805s were $200. That's a 20x difference by being one strike in or out the money. Same thing when we look at the put side. The 3810 contracts, so if you were right and you guessed we were going to be below 3810, boom, by $1, they were worth $2.90. The 3805s were worth 5 cents. They completely died. That's why I'm always trying to pick something where I think, hey, we could pass it. So I'm literally in my mind here, I'm looking for the cheapest contract that I can see on the chain, but as cheap as it is, I'm trying to make sure it's a level that I'm very positive we're going to hit and pass. It doesn't have to pass it deeply, but just by one. That's literally how I'm buying my contracts the last 30 minutes to hour of day. And that's how you see me like lately. I haven't been doing it because I haven't played the close a lot lately. I haven't had time. But when I was going on that crazy streak, I was doing this. And it's so crazy because when you get good at this, it's almost impossible, especially if you have a decent amount of money. Like, and I mean like even like only 1,000. It's so hard to go broke because you can literally, on days where you see this setup, throw $50 at this. And as it's coming down so aggressively, even if you don't, like, I'm telling you, this has a success rating of, it's got to be 80%. Because even the only time I would lose money with this, literally, is because I would hold too long and it would close or would pull back way too much. But most of the time, the moment I buy it, like, instantly I'm up 200, 300. Like just from this to this, you will be up 300, 400%. By the time you hear 500. So just think about it. If you're doing this every day with like just small amount of money, you know, 50, $100 as you're building, but you're hitting 500%, and you're doing this a few times a week because these expire every day. You start to compound very fast until you're able to use more money, until you're going in with a couple hundred and 500%. You know, you're turning 200 to 1,000, and you're going up 300, 400%. Turning a couple like $400 to 2,000, 3,000. And doing this again and again until your money gets bigger. That's the main thing I like to do to get higher percentages. Yep. This is what I was asking with finding comment. Yep. So yeah, that's the main ways I literally get high percentages. There's about 3 or 4. I'm waiting till lunch or after for the contracts to die off because of theta decay. I'm waiting the last hour to 30 for the extreme theta decay move. I'm looking for contracts that are going to explode off of moves that I think are squeezes. And then I'm looking for contracts where I can buy monthlies, 1 to 2 months, and ride them the whole time. So there's about 4 or 5 methods. Those are only 4 or 5 I personally use to get higher returns. That's it. I don't use anything else. Only thing, like anything else, the more you do it, the more you're going to get more experience. So when I first started, I had to analyze my contracts. I would be like, okay, this one I would plan. Now it's so easy. It's like almost intrinsic. I'll literally be like, oh, I bought this contract. When I bought these, I literally just went. All I did was go to the month. I was like, we're at the bottom of the broad information. We have an inside right here. I think this inside could go 2 up. Then I went to the 2 week. I was like, perfect. Even if this 2 week doesn't go up, as long as we continue, we can make another high like this and get us at about 28 again. If we get to 28, I'm good. Let me buy 27 contracts with the monthly expiration. That's literally how I picked them. It's that simple. That's usually how I'm doing most of my swings. I'm just looking to go out the money to in the money. Yes, so I only, with SPX, that trick, now, when I traded, I wish I would have known about this like in 2020, 21, because that trick, like, we kind of understand SPX, but we didn't realize like that it does that every day. Back in 2021, when we have a sell-off, every day we sell off like this and then pump up. Now, price doesn't sell off that obvious a lot of times. It'll sell off, but then it'll come back, where it scares you out. So it's a lot harder. But what can prevent that is once you get to a certain level and you're still buying appropriate to your account size, is waiting and getting contracts that are a day out, 2 days out. I know somebody who does very well, and I'm not a main swinger of SPX, but that's all they do. They're always buying contracts that are like 20, 30, 40 bucks, but they're buying them a day out, 2 days out, and they're hitting every day a couple 100% to 1,000%, swinging them. So it's possible with a small account. Now, for you guys, the contracts you're going to need to focus on outside of SPX and at those times are going to be the cheap ones. So that is why I played Mara and Riot, because they were $4. And when they went in the money, they turned to like $30. Like, it's contracts that are going to be very cheap that are like a strike out the money. So the more you trade, the more you're going to start to see them. So that's going to be your Maras, your Riots, your US Steel, your Coke, KO. And let me see. Oh yeah, gold and silver. These two are some of the best ones. Gold is going to be about 100 something usually, but silver contracts are usually like 20 to 30 bucks. These are ones that gap up a lot. But once you get used to these and you see a setup, these are ones where you hop in for a monthly or 2 to 3 weeks. And that's usually how I do. I'll get monthlies, but I'll also get like weeklies or 2 to 3 weeks. And when you look at the movement, you'll see all we did was gap up like crazy. This is from the end of November, December. We went from 20 to 2264, which doesn't sound like a lot, but for US Steel, once again, that's 10% on the asset. If you're paying only 20 bucks, but you're getting a delta payment of 40 per 50 cents, not dollar, 50 cents. That means a dollar is like 80 bucks off your 20. And you hit you're hitting $2. You're turning 20 bucks per contract into about 160, 140. And if you notice, when you look at these, like I said, they tend to hit lows and gap up. So from here to here, just looking at this, I guarantee this was over 1,000%. Guarantee you, off of weeklies. And I'll play these like that. I'll look for lows in a strong uptrend. And a lot of times I'll swing them overnight now because I know silver tends to gap up and so does gold. I guarantee you from here to here, this is easily over 2,000%. And this is just December. But at one point, nobody thought gold was going to get here. The smartest thing from here to here, if you were like, I think gold is going to get here in a month, don't give yourself a month, buy 2 months. You're going to be much more calmer. As you're buying these 2 months, it's going to give you 2 advantages. A, you're going to have time. B, it's always in your broker, in your face. So you can always see what gold is doing. So on days where it pushes up aggressively, you're like, I'm not going to buy, obviously. And then on days that it pushes down super low, you know it's in an uptrend, but you see you're down on the day, your contracts are in max pain. You know this is the best possible spot to buy. So that's another reason I always have swings going, because it's always going to alert me on days where like this could be low. Because it's a lot harder when you're not in something to watch something versus being in it and seeing your percentage goes up and down. When your percentage hits that max pain threshold, but you're in the uptrend, you know once you start to see your contract start rising rapidly, like this is the real reversal. Boom, let me get in some short dated weekly contracts to add to my monthlies. And a lot of times what I'll do, like think about it here, this is how I'll play. From here to here, like let me show you the contracts I originally bought, because they were like 1,000 for just 10 at the time. These contracts for the monthlies, if you're gonna go at the money, they would cost you, 10 of them would cost you about 2,000. If you were to go a little at the money and were to get the 173s, which is only $1.50 up, they would cost you about 1,000. But like I said, the weeklies, 10 of the weeklies would only cost you at this moment 600. What I like to do is buy monthlies, and then I look for opportunities to find lows where I know price is going to gap up easily. And I'm like, hey, if I spent 1,000 here, let me try and get 200 here, 300 here, and hit a 400% trade. Boom, I just made 1,200. I can now sell this, and now I've paid for this swing. So now I'm in this swing. Worst case scenario, even if it goes to zero, I've paid for it. But now I have a swing that is running that can make me literally, I don't know what's the return on zero. You know what I mean? Like I technically have nothing in it, because whenever I have swings, I'm looking for opportunities where it's easy layup trades to take short-term trades to pay for it. So as it's going up, once again, I'm just looking for lows. Boom, another 100%. Gaps up. Obviously, I'm not going to buy that. Look for a low. We're bouncing. Boom, another 100%. Boom. You keep doing that, your money is going to compound over and 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 over again. It's so simple. That's why I keep my list so small. If you notice, like, this list isn't going to change much the whole year. Obviously, I always only going to play ES, but CL is crude oil. The ticker that tracks it is USO. I track oil religiously. I track SPY and ES religiously. I track NQ and QQQ religiously. And now gold and silver, I'm tracking the gold and silver futures. And all I'm doing is waiting for opportunities where I see potential squeezes. Look at this. This move was huge. I just missed it. This move made a lot of money. But you can see, price is doing the same thing. We're already trying to make structure up, and we're in a little consolidation box where we can do this for 2-3 days, and then out of nowhere, explode back to these highs. I just try and make sure I'm on the right side. If I get stuck in consolidation, I know I'm only in this for a swing. This isn't for a day trade. You don't want to sit in this. I'm only sitting in this to get the low, like the hedge funds, for a swing. That's the only reason they sit in consolidation. But when they're ready, they're doing the same thing. They're accumulating here until the final move, where boom, now they're like, let's buy our final batch of weeklies or 0 days and make the most percentage. Yeah. Well, that's going to conclude this session. I'm recording. I got a few videos I'm going to drop for y'all that's going to help you guys out. One of them is going to be how to analyze contracts. And then I'm going to drop a few on just getting higher percentages. And then I might drop another one. I don't know if you guys are ready for it yet, but that's what I'm going to do. So once again, guys, I hope this one has been helpful. If I drop gems, light me up. Give me the ones. Yep. All right, y'all. Well, like I said, that's gonna be next week. I'm about to be out of here. Yep, there's gonna be like probably might be two possible, but yeah, don't want to do too much at once. So, all right, y'all. Well, I'm out of here.
All right, gang. So that's it. That was the high percentage play. How did y'all like that one? Now y'all got the gems on how to be playing SPX. Remember, yeah. So market's always changing. Just know right now we don't have the best conditions for it because we haven't got a trend. But today, at when we look here, this was the perfect opportunity for that. I happen to not be awake. Remember how I said we divide the day into two pieces, AMs and PMs. So we come here. From 9 to 10. I forgot I had that. It's the perfect move. What happened? We came inside. We went from 39.48 on a low to 39.84 to 39.95. That's like a 50-point move. Over a 50-point move. So in contracts, 50 points, you're getting $1 delta to 10, 5. Yeah, the contracts literally from down here.
We can't see your screen.
Oh, okay. Good looking. I don't know why it does this again. Oh, that's why I'm not doing full screen. There we go. There we go. So them contracts, like I was saying, they went from down here around lunch. They went from down here at lunch, 39.48, 39.95. This 50-point move made these contracts go from like 10 cents to over $5. You paid from $10, $20 a contract to 500. So understand that these moves do happen all the time. You gotta be prepared. But that's why you notice I divide the day. So come here, you can see. What was AM market? What did you guys notice about AM market right here? Something I tell you guys always look out for. Yep, exactly. The more shitty consolidated the AM, the better the PM. And we saw it right here. It's the second day in a row the shit did it, and I was asleep. But it's all good. Catch more. I'm mad I didn't catch this one though, but it's all good. Same thing Wednesday. So the more you can get patient, start noticing that, the more money you're gonna make. That's why when it's here, I'll be so happy to chill. Why about to try to force trades? Y'all notice that? I'll be like, no, I'm good. I took a trade here that shit confused me. I stopped myself out. I looked at the structure. I could tell I didn't know what was going on. Once I knew that, I was like, all right, time to stop trading. Lunch hour comes. Boom. Sweep the lows before lunch. So just know, if we're going up, sometimes we're going to sweep the low before or the lunch. If it's a newer low, maiden lunch, we're going to sweep that low. Same thing if we're going higher. I mean, if we're going to go down, we'll sweep the high or the high made. But besides that, I'm out, y'all. I'll see you on the group. Yep, anytime. Appreciate y'all. Let's get this money, y'all. Let's get fucking rich.